Hi and welcome to ECCB Connects. This week we speak with Michael Hafeman, consultant at the World Bank, about the ECCU Insurance and Pension Bill and how it benefits you. Stay with us. We'll continue in a moment.
EC Polymer Notes, our new money.
Here's how you can detect genuine EC polymer notes. Feel. Polymer notes feel smoother than the material from which paper notes are made. Also, the front of each note has raised bumps at the top left-hand corner. These bumps form shapes that are familiar to you. Look for the clear window at the front and back of each note. This window allows you to see through the notes. If you hold the notes up to the light, you'll see the value of the note in an area of plain colored print. Tilt. A holographic foil is on the $100, $50, and $20. The images move and their colors change when you tilt the notes. Remember, detecting genuine EC polymer notes is as easy as 1, 2, 3. Feel, look, and tilt.
EC Polymer Notes, cleaner, safer, stronger.
Michael, welcome to ECCB Connects.
Thank you.
Michael, you've been working with the ECCB on a very important project, the Eastern Caribbean Currency Union Insurance and Pension Bill.
Yes.
Okay, this is a very important bill because it speaks directly to people's funds and really their wealth. Tell us a bit about the bill itself. What does it entail?
Well, the bill is quite comprehensive. It deals with all aspects of regulating and supervising the pension and insurance sectors. And so it's covering things like the licensing of the entities that are operating in the sector and the intermediaries in the case of insurance that are selling insurance and providing service to customers. It also deals with conduct of the entities involved, the insurers and intermediaries and the pension plans. And a lot of provisions there about the solvency of the providers. So trying to make sure that the insurance companies and the pension plans that people are relying on to provide benefits are financially strong enough to do so. Also deals with the Eastern Caribbean Financial Services Commission itself, which is a proposed regulatory body that would work in the region and oversee those industries. And so it talks about the powers and responsibilities of that organization and the way it's going to be funded and how they can deal with things that they might not like that they're seeing happening in the sector.
So in short, it's really providing that extra financial protection for the citizens.
Yes, it is.
Because so the bill is going through some reform now. Why was there a need for reform at this time?
Well, now there are separate pieces of legislation in each of the territories and separate supervisory agencies in each territory as well. And when the entities that operate in the market, the insurers, the intermediaries, the pension plans, are operating and they've got business in more than one of the territories, they've got to get separately licensed and meet separate requirements in each place. And it doesn't make for a very efficient market. And so having centralized regulation and supervision is designed to help the market to operate efficiently and to grow better, provide more services to the public. Also by consolidating the regulation supervision in one agency, it's going to help to build the resources available to do that and enable them to do a better job of protecting the public.
Tell us a bit about the work that has gone into the project so far.
There are actually two main legal documents that form the legislation, and that is the Commission agreement. And so that's an agreement among the countries to establish this Financial Services Commission. And 6 have signed on to it. The other 2 hopefully will do so soon. And that really sets out the framework for setting up this agency. And it also provides for some very key principles that they're trying to meet through the legislation, like facilitating a common consolidated market by allowing what they call passport rights for the regulated entities to operate in more than one territory without getting separate licenses. And so the principles that are set by that piece of legislation are being fleshed out in the bill itself. So the Insurance and Pensions Bill, which is a very long document, several hundred pages, about 500 sections to it. So it's quite comprehensive. But the Commission agreement is the first step, and as I say, that's been dealt with at least in 6 of the 8 territories so far.
What's next?
Well, what's next then is to get the bill itself, the long document, into shape. And so I've been working on the project on behalf of the World Bank through this year to help do that. And so the bill is in its 4th or 5th draft by now, so it's been underway for several years. But what the ECCB and the World Bank wanted me to do is to provide some technical review of that to make sure that it's dealing with all of the important issues that should be dealt with, and that they're handled in a way that's consistent with international standards for regulation and supervision. And so I've been doing that, and at the same time working with the project team and the legal drafter on it to make sure that the provisions are clear and suited to the market here, and getting input from the stakeholders like the insurers, the pension plans, pension consultants, and so forth on what's in the bill to make sure that it's practical to be implemented and complied with and clear enough.
The ordinary man might ask, what's in this bill for me? Why should I care? Why should I want to know more about it? What's your response?
Well, it's be very rare for the ordinary person to read a bill like that, because it is a long and somewhat technical document, but hopefully it's written clear enough so that if people wanted to do that, they can. But portions of most interest to consumers would be things that deal with, let's say, the behavior and governance of the insurance companies, the pension plans. And so what are they supposed to be doing in the way they operate and how they treat the consumers that they deal with? And so it talks about, for example, the need for them to have processes and systems for dealing with complaints. And so they've got the right to complain to the providers if they're not happy. And if they're not satisfied, then they can go to the Commission and seek some help from them as well. It talks about things like, the need to pay claims in a timely and fair manner. And if the claims are not paid in a timely manner, then the consumers are entitled to interest on the amount that's due to them. So those sort of protections are there. On the pension side, it deals with things like vesting requirements, the need for pension plans to have statements of investment policy so that the members can know how the money is being invested. So, very many things that bear directly on the ordinary man and what they could expect to see and what they should be expecting the providers to be doing, and what sort of recourse the Commission would have if those things are not being done that should be.
Okay, I'm having you mentioned recourse because I was coming to enforcement, because you might have a document in place that says if I'm not happy I can lodge a complaint, but what is in there to ensure that these things really happen? Enforcement.
Well, the most of the enforcement provisions deal with the enforcement of the requirements of the legislation on those who are being regulated. So on the insurers, the intermediaries, the pension plan trustees, and the employers that are funding the plans. And so if those parties are not doing what they should, the Commission can take action, and it sets out quite a wide range of things that can be done. from just advising them of concerns and seeking them to deal with it, to making formal orders and directions to them, to finding them, to seeking prosecution for criminal offenses in some cases, and even to the point of withdrawing their license or registration and putting them out of the market. So there are a lot of tools that can be used, and it's not arbitrary. Of course, there's always judgment involved in trying to assess how serious a problem was and what's the best thing to do about it. But there are provisions there that the regulated entities, if they don't agree with the decisions of the Commission, in most cases they've got recourse to appeal to an appeals board that's been, I guess, not created yet because all of this is not in force, but the basis for it is set out in the Commission agreement. And that appeals board would be independent of the Commission itself, so that's a review mechanism to make sure they're doing their work fairly. And then if the party is still not satisfied, they can appeal beyond that to the courts.
Okay. You mentioned some entities with whom you've been working, the Commission, the ECCB, the World Bank is involved, the legal drafters. This is a bill that affects the individuals, the citizens. If individuals wish to read it or offer some sort of comments, how can persons access it?
There is a website for the project to set up this regional agency and to get the bill in place, sipmp.org, and that's been there for a while because the project has been underway for at least 2 years or so. And so other documents that relate to the project are there, and the bill will be there as well that people could take a look at.
What are the next steps? Where do you go from here?
Okay, so the draft has been through a lot of consultation, and there were comments that came back both in the consultation meetings and written comments that came afterwards. And the team that's working on this has been through all of those comments and analyzed those. And many of them are just people looking for more explanation of what's in there. And so explanations will be provided. Some of them suggested changes in the drafting, and those changes are being made. Not always exactly as they've been asked for, but the issues that have been raised have all been carefully considered and responses developed. And so once a new draft of the bill is in place that incorporates those changes, it will be going to the ECCB legal department for their review. It will go to the Monetary Council for their discussion, because there are several issues that are very policy related that need their input in order to finally resolve what's to be done about that. And then after that, the final touches can be put on the bill, and then it's a matter of taking it to each of the 8 jurisdictions and getting the legislative bodies to adopt those. And the hope is that that will be done sometime toward the middle of 2020.
Okay. Michael, thank you very much for speaking with us on ECCB Connects.
Oh, you're welcome.
To view any episode of ECCB Connects anytime, any place at your convenience, check us out on YouTube, Facebook, and LinkedIn at ECCB Connects.
And now for this week's financial tip.
Start saving today. Any savings, no matter how small, add up. $1 a day gives $365 a year.
Here's where we end this week's episode of ECCB Connects. Thank you very much for watching, and we invite you to join us again next week for another program.